Dear students, welcome to Doctor's Academy for Taxation and Accounting. Through this video, let us discuss certain other profits chargeable to tax under the head Profits and Gains of Business or Profession. The first item that we are going to deal here is recovery of any loss or expenditure allowed as deduction in an earlier year as per section 41 subsection 1. If any sum allowed as deduction as a loss or expenditure in an earlier year is recovered in a subsequent year, the amount so recovered shall be treated as deemed profit and shall be chargeable to tax under the head Profits and Gains of Business or Profession. Similarly, if any loss or expenditure has been allowed as a deduction in an earlier year and thereafter, if the business has changed hands and subsequently the successor in business has realized any amount in respect of such loss or expenditure, the amount shall be deemed to be profits chargeable to tax in the hands of the successor. Second item is profits on sale of assets on which depreciation is claimed in straight line method as per section 41 subsection 2. Where any building, machinery, plant or furniture which is owned by the assessee in respect of which depreciation has been claimed on straight line method and which has been used in business is sold, discarded or demolished or destroyed, and the monies payable in respect of such asset together with the amount of scrap value exceeds the written down value, the excess up to the difference between the actual cost and the written down value shall be taxable as deemed profit. The deemed profit is assessable even if the business to which it relates has been closed down. Under section 41 subsection 2, money refers only cash and not money's worth. Where an asset is reinstated by insurance company, benefit derived from reinstatement is not covered under section 41 subsection 2. Third point is sale of asset used for scientific research, section 41 subsection 3. If a capital asset used for scientific research is sold without having been used for other purposes and the sale proceeds together with the deductions allowed under section 35 exceeds the amount of capital expenditure incurred on it, such surplus or the amount of deductions allowed, whichever is less, is chargeable to tax as business income of the previous year in which the sale took place. If the deduction allowed is less than the aforesaid surplus, the excess of surplus over the deduction allowed is chargeable to tax as capital gain. Bad debt recovered as per section 41 subsection 4. If a bad debt allowed as deduction in an earlier year is recovered in a subsequent year, it is taxable as deemed business profit in the year of recovery, even if the business or profession to which the recovery relates is closed before the year of recovery. The next is recovery after discontinuance of a business or profession as per section 176 subsection 3a and 4. If any business or profession is discontinued in any year and any sum is recovered afterwards, it will be deemed to be income of the recipient and charged to tax in the year of receipt, provided that if it had been received before the discontinuance of the business or profession, it would have been chargeable to tax. The next point is withdrawal from special reserve as per section 41(4)(a), where any amount is withdrawn from the special reserve created and maintained by a specified entity under section 36 subsection 1 clause 8, it shall be deemed to be chargeable profits of the previous year in which such amount is withdrawn from the reserve account, where the amount is withdrawn from the reserve accounts in the previous year in which the business is no longer in existence. It will be chargeable to tax as if the business is in existence in that previous year. The next is set off of losses against profits chargeable to tax under section 41 subsection 5. Any loss of business or profession of the year in which it ceased to exist and which could not be set off against any other income of that year shall be set off against the aforesaid profit under section 41. However, such a loss from speculation business cannot be set off. And the last point is taxation of interest income of public financial institutions on doubtful debts. Section 43D. In the case of a public financial institution or a scheduled bank or a cooperative bank, other than a primary agricultural credit society or a primary cooperative agricultural and rural development bank or a state financial corporation or a state industrial investment corporation or a public company, income by way of interest on certain categories of bad and doubtful debts shall be chargeable to tax in the previous year in which it is credited to the profit and loss account or in the previous year in which it is actually received, whichever is earlier. The banks and other financial institutions normally credit interest on such doubtful debts known as sticky advances to the interest suspense account and not to the profit and loss account. Hence, this newly inserted section 43D permits these institutions to be taxed for such interest only when either it is actually received or when they become sure realization and they credit it to the profit and loss account, whichever is earlier. Hope the concept of other profits that would be charged to the head of income, profits and gains of business or profession is clear for you. Thank you very much for watching Doctor's Academy for Taxation and Accounting. If you have not subscribed to my channel, kindly do it. Thank you very much.